One of the strongest crypto setups ever is slowly coming together behind the scenes, and it's happening faster than anyone thought possible. It's getting closer and closer to being possible to buy XRP ETFs. When they do, there will be a huge influx of institutional capital that could completely change the altcoin market. XRP is now in the same pattern that set off the Bitcoin and Ethereum ETFs, but this time the conditions are even more powerful. This is not advice about money. This is where things get interesting. Everyone is focused on the government shutdown that is still going on, but something very important has been going on in the background. Ripple and its partners have been getting ready for what could be the biggest event in the history of XRP's liquidity. Because of the shutdown, the SEC hasn't been able to make any decisions yet, but once they can, there could be a huge number of approvals for crypto ETFs. A lot of people are waiting for more than 150 digital asset ETFs. And XRP is right at the front of the line. A lot of big names like Canary Capital and 21 Shares have already filed early. Those weren't small moves. They were planned moves. Not only did these papers show up out of the blue, they were prepared and sent in right before the shutdown. This puts XRP right at the starting line when regulators get back to work. The grid was set in motion by Ripple before the rest of the market knew what was going on. Even though Bitcoin and Ethereum ETFs have already proven the model by bringing in billions of dollars and giving traditional investors confidence in crypto, XRP could be the next one to get the institutional stamp of approval. This is not about hype, it's about structure, demand, and time. Right now, all signs point to a coordinated wave of ETF approvals when the government reopens. But here's the thing, the government is closed every single day, which means that more energy is building behind these ETF files. Take a look. There are more than 150 applications waiting for a single green light. As soon as the switch is turned back on, those choices could start to hit the market very quickly. Among those, XRP is one of the most looked forward to. Do not forget that XRP is not just another currency. It is already a part of payment systems, the budget, and even networks for institutional settlement. Ripple has been building up to this point for years, and the acceptance of the ETF could finally link that infrastructure to Wall Street money. Certain types of funds, retirement plans, and wealth managers have been looking for a legal way to get more exposure. The XRP ETF could help them get started. Indeed, experts such as James Seifert have been pointing the finger at the fact that XRP and Solana ETFs are part of the wave of approvals. The evidence tells the story when you look at the past cycles. Money poured in by the billions as soon as Bitcoin's ETF went live. After that came Ethereum. It got off to a slower start, but it picked up speed once the market as a whole turned bullish again. That's a path that XRP could easily take, but with a twist. It's coming out of a base that has been slowed down and has a huge amount of unmet demand. XRP is currently near a zone that has been overdone in the past, like we saw in October 2024. Back then, the price of XRP stayed the same for weeks before skyrocketing when demand reached a high level. It looks a lot like the situation today, but the triggers are even bigger this time. In addition to ETF filings, Ripple is said to have raised more than $1 billion to grow its treasury operations and buy more XRP directly to improve network security and liquidity. That's a clear sign that they are sure of themselves. At the same time, big brokerages like Charles Schwab have said in public that their clients own 20% of all crypto exchange traded goods in the US. That's really big. When big companies like Schwab, which is one of the biggest brokerages in the country, talk about this kind of interaction, we know it's no longer a niche subject. It is popular. And in the past year, visits to Schwab's crypto platform have grown by 90%, showing that people want to learn more faster than ever. That desire will have a new way to be met once ETFs like XRP go live. Institutions can now allocate through regulated investment goods, just like they could with Bitcoin and Ethereum. Retail traders no longer have to buy on exchanges by hand. And we all know what happens when there isn't enough supply to meet the demand of institutions. The price doesn't just move, it soars. Time is really important, though. The government shutdown has to end soon. In the past, these kinds of shutdowns have lasted anywhere from 10 to 35 days. Some experts think this one could last up to 40 days, which would be the biggest in US history. But the moment of reopening is what counts, not how long it lasts, because that's when all the ETFs come out. And the first group of decisions could have a huge impact on the whole altcoin market. That's why XRP is so special. Ripple is one of the few large cap cryptocurrencies with regulatory security because the SEC case has made the law clear. This is one of the most unequal situations in the market, with ETF filings ready to go, institutional partnerships growing around the world, and Ripple actually buying XRP for its own use. Institutional buyers like things that they can plan for. They like having order. And XRP has both. It's not just a coin for speculation. It's a utility-based product made to move value in the real world. The story about XRP could change a lot once ETFs give it that extra layer of authority. All of a sudden, something that was thought of as a crypto asset for banks turns into a common digital asset for investors of all kinds. And this is what most people miss. It's not just XRP, Solana, and a few other coins that have ETFs. It's about getting in. Once the machinery for these ETFs is set up, it will be easy for new crypto investors to get in. The altcoin market will have an easy legal way for traditional finance to get in, and XRP is set to gain from being first in line. There are rumors going around among ETF experts that the SEC's internal process has already looked over a number of XRP-related filings before the shutdown. That means those decisions could happen quickly once business starts up again. And in the past, when new ETFs come out, there is a lot of demand for both the new ETF and altcoins that are linked to it. That's the start of alt seasons, not at chance, but through well-planned flows of cash from institutions. Even more interesting is the fact that Ripple isn't slowing down. Besides the changes to the ETF, Ripple's plan for growth is speeding up. Smaller fintech companies have been quietly bought by the company and added to its community. This has made it possible for more businesses and banks to use XRP and XRPL. All of these steps lay the groundwork for long-term, stable demand. This is why a lot of people in the know think XRP will lead the next wave of altcoins. It's not just about quick moves or traders getting excited. It has to do with going global and updating the financial systems. And the ETFs are the last link between the old and new systems. The market is quiet right now, but things are moving in the right direction behind the scenes. Forms for ETFs are ready. Demand from institutions is rising sharply. Ripple is building up. As soon as the government reopens, there could be a chain response that the XRP community has never seen before. As soon as the government reopens, the games begin, because there will be more than one green light for each of those ETF applications when they get to the approval desk. There is a whole wave of goods ready for use in institutions that are ready to go live. And that's when markets change overnight. Investors who have been waiting for more information are finally told it's safe to move. And a lot of cash comes in from everywhere. In simple words, this is what it means. Once these XRP ETFs are accepted, they will make investing in XRP easy, safe, and familiar for both individual and institutional investors. They will not have to deal with exchanges, wallets, or regulatory uncertainty. We saw the same change happen when Bitcoin ETFs went live. Before getting approved, buyers had to go through a lot of complicated steps. After that, ETFs made it easy for billions of dollars in traditional capital to come in. XRP is now facing the same road. Ripple's business partnerships, regulatory battles, and global network expansion over the past few years have laid the groundwork for this. Remember when the Bitcoin ETF first came out and more than $1 billion poured into it in just the first week? It wasn't just talk. That proved something. Wall Street saw that digital assets were no longer just a different way to spend. They were a whole new type of treasure. When Ethereum ETFs came out, it showed that banks were ready to spread even more. Now picture that energy going toward XRP, a digital asset that was created from the ground up to make fast, cheap payments between countries possible. Just the story of how efficient it is gives XRP a unique edge that could lead to more acceptance than most people think. This time, though, things are different because XRP is already being used by banks, payment providers, and other financial companies around the world. Ripple has agreements in more than 50 countries that involve moving real money, not just ideas. In other words, an XRP ETF won't just be an idea when it goes live. It will be linked to a coin that moves billions of dollars through networks in the real world right now. This mix of usefulness and institutional exposure could be what makes the next bull cycle unique. Analysts at ETFs are talking more and more about how quickly this next round of approvals could happen once the government starts working again. Market Insiders says that the SEC is already using a streamlined review method for ETFs that hold digital assets. This is because of the new rules that were put in place earlier this year. That framework lets applications move forward on their own if they aren't directly turned down within a certain amount of time. That is, once everything is back online, A few important ETFs could quietly move through the system without making a lot of noise until they show up on trade platforms all at once, ready to go. That's why the quiet right now is so misleading. It seems like the government shutdown has stopped all work, but in fact, plans are being made behind closed doors. Companies are getting ready to launch within days once they get the go-ahead. They are making changes to their fund structures, marketing materials, and custody arrangements. XRP's files, led by Canary Capital, 21 Shares, and a few other issuers who have not been named, are already well along the way. This fits with a bigger trend we've been keeping an eye on: digital assets becoming more like real assets. Financial giants like Fidelity, BlackRock, and Charles Schwab have all stated that their clients are becoming more interested in crypto-related investment products. Schwab told us that their clients own 20% of all crypto ETF exposure in the US. This gave us a sneak peek at what's to come. When more digital assets are accepted, those clients will want to use more than just Bitcoin and Ethereum. XRP is the next best option because it is stable, easy to buy and sell, and useful in the real world. The fact that Ripple just raised $1 billion is another thing that makes this moment special. Ripple isn't raising money to stay alive. They're doing it to grow. Reports say that a big chunk of that money will be used to buy XRP for the company's internal budget, make more deals with central banks, and pay for the growth of the XRPL ecosystem. When Ripple buys XRP on the open market, it lowers the amount of XRP that is in circulation and makes it harder for people to get cash. The same kind of liquidity that ETFs will need when they start trading. This makes a cycle where demand keeps going up even though supply is getting tighter. This makes the effects of each new institutional entry stronger. We've seen sets like this before. It wasn't clear to the market how much Grayscale's Bitcoin Trust would affect things when it first started buying Bitcoin. Over time, that buildup led to one of the biggest bull runs in the history of crypto. If Ripple's approach of building up its value continues while ETFs are getting ready to go live, we might see a similar pattern with XRP. This time, though, it's not just institutions buying for clients. Ripple is also taking part to make sure that liquidity stays in its environment. While the market waits, the XRP price chart is slowly repeating patterns from times when the price broke out in the past. XRP is currently at a level that has never been seen before because it is oversold, and the RSI numbers are similar to some of its biggest turning points. This same thing happened in October 2024 when XRP fell into a stabilization zone and then shot up when market liquidity came back. Things don't always happen the same way, but history often matches. All signs point to an accumulation phase finishing soon as well. Another thing that most people miss is this. One of the strongest fundamental ecosystems in crypto has been built by the XRP group. On XRPL, developers are working on DeFi apps, tokenization projects, and trading protocols. Many of these could connect to ETFs in the future when tokenized assets like real estate, commodities, or treasuries show up on XRP ledger-based platforms. ETF makers will naturally look to them as a way to spread their risk. This gives it more long-term value than just trading in the short run. Now that we've taken a step back, the whole crypto world is moving toward being used in real life. Digital asset models are being looked at by governments and central banks. Stablecoins are being tested for use in settlement by payment networks. The IMF and BIS are talking about how to use blockchain lines for global interoperability. And in that global talk, Ripple's technology and XRP's liquidity model keep coming up as good choices for infrastructure. There's no chance in that. It shows that crypto usage by institutions is getting better. As soon as the structure of the ETF makes it possible for compliant XRP exposure, it can be used in public markets instead of just business partnerships. Imagine that asset managers, pension funds, and family offices put small amounts of their holdings into XRP TFS to spread out their risk. Even a 0.1% change in where global controlled assets are put could bring in hundreds of billions of dollars. That's the kind of change in capital that can change the past of prices. We also need to think about how ETFs make people feel. When a new ETF comes out, it gives standard investors faith in the asset. This feeling of validation often leads people to shop there too, causing two waves of demand. Bitcoin knew about it. That was seen by Ethereum. Next is XRP. As soon as the approval news hits the news, people's feelings can change quickly, causing a rush of fear-driven buying that adds to the flows from institutions. But what's most interesting about this setup is how well everything works together. Ripple is getting bigger. Institutions are getting ready. The shutdown of the government has made a fake stop. When the break is over, the law will become clear, technology will be ready, and the market will want it all at the same time. A lot of delays from the SEC case to the current shutdown seem to have been building up to one big point. It makes sense for experts like Nate Gerasi to say that once the government shutdown ends, the floodgates for spot crypto ETFs will open. From the order of filings to the latest information on amendments, everything we've seen so far points to a busy approval calendar that could lead to a flood of new ETFs in a very short time. It could not be a better time either. More general signs of the economy show that people are once again interested in risky investments. Gold just hit a new all-time high, which means buyers are taking precautions and there is pressure on prices to rise. At the same time, crypto is often the next big thing. This means that as trust grows, money moves from metals and traditional hedges into digital assets. Adding XRP ETFs to the mix could make that rotation much bigger because they provide an organized and regulated way to get into crypto upside. So where does this leave XRP right now, right in the middle of being ready and being excited? Even though prices may not seem to be moving, the facts are speaking louder than ever. Real-world use, clear legality, and soon-to-be available ETF access make this asset one of the best investments you can make. It's clear that this is not a short-term event when you look at all the pieces. Ripple's billion-dollar buildup, institutional readiness, ETF filings, and broader trends. It changes the way that value moves through crypto markets in a fundamental way. And when those ETF approvals finally fall, XRP might not just join the altcoin rise, it might even start it. Because this time, demand isn't just based on rumors. It's infrastructure, compliance, and adoption on a world scale, all coming together to make one huge breakthrough. Now, the story gets really interesting. Even though the news is full of stories about Ethereum, ETF approvals, and Bitcoin's domination, the smaller moves going on behind the scenes are showing a very different picture. That XRP could become the best way for regular money and digital assets to work together. Not only a payment ticket, but also the base of a whole new financial system that companies have been working on behind the scenes for years. Most people still don't understand this. No matter what ETF is being talked about, Beta, Ethereum, or even Solana, the topic always comes back to liquidity and how quickly trades can be settled. Institutions need assets that can quickly and easily move huge amounts of money across countries. That's not possible with Bitcoin. Ethereum's speed problems and gas fees also make it hard, but XRP was designed to do just that. Move value quickly and for almost no cost. That's the part that the mass market keeps ignoring. Because everyone is speculating, but the game has actually changed to be more about usefulness. A whole financial ecosystem is quietly getting ready for the day when tokenization across borders is the rule. Institutions that used to make fun of XRP are now working with Ripple to add on-demand liquidity and get their systems ready to deal with tokenized fiat, stocks, and even commodities in real time. Now think about this. The US government is still partially shut down, which means that the SEC and other agencies can't make any new decisions about ETFs. But when that door opens again, it will be like a floodgate. All of the applications that have been waiting will be reviewed at the same time. Each acceptance or rejection will cause changes in the altcoin space. OKing, the Bitcoin ETF, was the first step. The second step was the Ethereum ETF. And step 3, which no one is ready for, could include the things that allow those systems to communicate with each other. In that discussion, XRP is at the center. It doesn't matter if XRP turns into the next Bitcoin. It's about whether XRP turns into a way for all digital money to move around. As soon as big central banks start using tokenized fiat, which they will, the need for fast neutral settlement will go through the roof. And that's when the light changes. At the moment, Ripple is growing its relationships faster than most people realize. There is no noise or fanfare when new routes open in Asia, Latin America, and the Middle East. And each of those routes could bring in billions of dollars in cash. When ETFs finally let big institutions invest in crypto, those routes will become the main ways that value moves around the world. The signs are already there. Ripple is getting to know big banks, payment processors, and even groups backed by the government. In the meantime, places like Singapore, the United Arab Emirates, and Japan are moving toward rules that support blockchain-based payments. It's no longer just guesswork, it's now about placement. XRP is also in a unique situation. Plus, the people who know this already aren't waiting for proof. They are seeing the infrastructure being built in real time, as well as relationships, clear rules, and now the quiet work that is being done to get ETFs included. When those three things come together, the world will change faster than anyone thinks, because the market stops being a casino and starts running like an economy when usefulness meets liquidity. XRP is already at that fork in the road. The time frame is something that not many people talk about. When the government reopens, decisions about the ETF might be made in weeks instead of months, and each acceptance sets a new standard. Because Ethereum has an ETF, all altcoins with institutional support have changed the way they work. XRP is a different case. It's already legal, has real-world use cases, and is being used by businesses. The green light from the authorities is the only thing that is missing. When that happens, the money will not only come in for speculation, but for the whole system. That means how fast is the real question, not if. Because markets that move this slowly before a change in regulations usually mean that people inside the company already know what's going to happen. There's a reason for the agreements, patents, and hallways. In plain sight, they're the building blocks of a new banking system. What's with the irony? Many people won't understand what happened until it's too late. People online are talking a lot about when the moon or ETF will be revealed, but the real players are learning more and getting ready for what will happen before the news comes out. They know that guessing doesn't lead to the most money. They come from seeing patterns before they become popular. This next wave will come, but it won't be driven by hype. It will be driven by unity. Everything will be different when an XRP ETF is released. It gives cross-border use legitimacy in a way that no statement ever could.